Welcome to Real Estate is Taxing, where we talk about all things real estate tax and break down complex concepts into understandable, entertaining tax topics. My name is Natalie Colati. I'm your host, and I am so excited that you've decided to join me. How would you feel if you were told that the price to complete your taxes this year was going to be just shy of $30,000? What if that also didn't include an additional $8,500 fee for the upfront tax plan? This was the Facebook thread I stumbled across today, and it aligned perfectly with today's topic. I want to chat with you guys about a very common question that comes up, and that is, how much should I be paying to have my taxes done? Now, when it comes to this question, there is no one-size-fits-all answer, and that's why the responses when this is asked in a public forum are rightfully all over the place. Some of you guys heard that introduction and you thought, $30,000 to have my taxes done, holy shit, what did that person possibly have on their tax return? They must have had some crazy corporation, maybe some international items. This must be a huge company. There are other people who heard that number and thought, well, yeah, I would happily pay that if it saved me more than it cost me, and every opinion in between. And this is always what comes up when this is asked in a Facebook group. When it comes to tax return pricing, there are an infinite number of things that go into this, but we are going to focus on three core things that are tying into the current pricing market for tax services. We are going to talk about the difference between a tax return preparation and tax planning. These are apples and oranges, and a lot of people intermix the two. We also have a huge shortage of professionals in the industry right now, and it is only getting worse. And based on the laws of supply and demand, pricing is going to be impacted. And lastly, all of the individual circumstances that go into what your tax return is going to cost. Now, we don't have enough time on this episode to cover each and every little thing that can change your tax return's pricing, but we are going to hit on some of the big picture things that people often don't consider, or common misconceptions when it comes to what impacts pricing and why. So let's get into things. Now, at the beginning of the episode, I mentioned someone who was quoted around $35,000 by a tax firm. And this was for their tax returns and also some tax planning, but we don't really know the details of that. All we really had from the post was that this person had 4 rentals and 2 small businesses. That could mean almost anything, and we're missing a whole lot of other information. So let's fill in some of those blanks. Tax preparation is typically going to be a lower cost service that occurs once a year. This is a transactional event. This is you gathering all of your financial documents for the year and sending them or bringing them into a professional who is going to enter them into the tax forms, applying the tax code and what they know to be accurate, and submitting it to the IRS on your behalf. It is very transactional. It is a snapshot of your situation from the past year. There are only a few things that can be done after the fact to change your tax position. A large part of this is already done. What's happened has happened, and a tax preparer is just reporting the end result. So this isn't a service that is necessarily going to save you any money, that is going to apply additional strategies that might relate to your situation. This isn't a service that is necessarily going to put a ton of time into the big picture of what you have going on and what could change going forward and provide advice, etc. Tax planning tends to be on the very opposite end of the spectrum. Tax planning and strategy tends to be a more expensive service, and it is being proactive instead of reactive. Instead of this being a one-time transactional event where you work with a professional, where you hand your documents off. This is an ongoing relationship with a professional. This is working with someone throughout the year. This is being able to ask those tax questions of an expert throughout the year. This is being able to have suggestions made to you when you are thinking about selling a business or buying a property or any of these big decisions that can have a tax impact, and receiving in-depth feedback on the differences of outcome. Tax planning and strategy is designed to look forward, to save you money on taxes, but that might not be the only thing that's important to you. It might be important for you to qualify for a specific loan in the next year because you're trying to buy a business or buy a property. It might be important to you to plan your income levels to be able to qualify for certain credits or subsidies or things of that nature. All of these forward-looking items are what tax planning and strategy will address. So let's think back to that beginning of the episode, $35,000. We don't know what her exact details were, but $8,500 of that was for an initial tax plan. If someone has multiple properties and multiple businesses, I can think of at least 25 different things that could potentially be applied just off the cuff to put them in a better position tax-wise. If those items that can be applied to one of their multiple businesses or properties saved them a total of $20,000 in tax next year, would it be worth $8,500 to have received that advice? Most people would say yes. And that's the difference where if they had gone to a very transactional tax firm, those things wouldn't have ever been investigated in most situations. On to the next current impact of tax return pricing. Everyone is getting the hell out of this industry, and COVID didn't help it. I graduated college almost 10 years ago to the day. It was August of 2014. And at the time I graduated, I was told that something like 70% of currently practicing CPAs were set to retire in the next 10 years. We are there. We are at that 10-year mark. And during COVID, we had all of these new requirements. We had CARES Act. We had all of these laws that were coming out with tax implications and credits and all of these things we had to learn as they were happening pretty much. Like mid-tax season, you were learning new things to apply to the tax returns sitting in front of you. And there were some people who might have stayed in and worked in the industry for another 5 or 10 years, and they were just close enough to retirement that they said, never mind, not worth it, and they bounced. We are having people exit the tax industry at a much quicker rate than we have people coming into it. There was a recent study that said that 75% of the CPA workforce reached retirement age in 2020. Between 2020 and 2022, over 300,000 accountants and auditors left their jobs. That 300,000 accountant figure came from a Wall Street Journal article that recapped that as being a 17% decline of accountants in the workforce during that 2-year span. There's a number of reasons that came into play here. The accounting industry doesn't line up with a lot of tech industry jobs for salaries versus amount of education required. In addition to that, tax law has gotten increasingly complex, and technology has added more requirements that we need to maintain to keep data secure. And when firms are having a data breach, most of the time it forces them to close as a result. The financial outcome of a firm having data breached is tremendous, and most firms can't survive that. So the cost to maintain a secure environment and to operate in compliant manners is getting more and more expensive, and the tax code is getting more and more complicated, and it's just becoming harder to operate in the industry. These factors, in conjunction with the fact that we have not made tax season sound sexy at all, is also keeping people out of the industry. So between those similar years, which part of this is due to COVID, but between 2019 and 2020, there was less than 73,000 people who received a bachelor's of accounting or a master's of accounting, and that was the lowest figure in a decade. So again, I'm sure part of that relates to COVID, but some of those other factors come into play as well. In alignment with the reduction of people getting degrees in accounting, during those same years, there was a 17% decrease in CPA exam candidates. So fewer and fewer people are coming into this industry, and 75% of practicing people are ready to get out of this industry. So what this means is that pricing is going to reflect someone's demand. So right now in accounting, it has been incredibly hard to hire adequate professionals in tax. That's because anyone who's really good at this has basically either started their own practice or they are demanding such a substantial rate because they know there is scarcity. And so these costs are going to apply to you guys. Let's pull it back to the start of the episode again. $35,000 for an annual cost for tax work. Does that person need services that cost $35,000? Is there a chance that their circumstances are simple enough that they could go somewhere and have it done for $3,500 or maybe even $350? Absolutely. But here's what it comes down to. If there are becoming fewer and fewer tax professionals, those who are in that average band is going to get skewed down as well. So the amount of practicing tax professionals who are just pretty good at this, the total number is going to become smaller. If you want someone who is by definition above average or absolutely kick ass at this, the number that fit into that category is also going to be much smaller. So could that person with the $35,000 quote, could they have a simple enough situation to go somewhere else and pay much less? Absolutely. But regardless of how complicated someone's situation is, if the person they want to work with is someone who is capable of doing much more complicated work, that level of work is the value of their time. There is no reason for them to substitute your easier work in for work they could charge 3 times as much for when they have a demand for them and their skill set for that higher quality, more complicated work. So this doesn't mean you can't work with that person who has that incredible skill set. It just means that you are paying for their level of expertise regardless of if you need every bit of it at this point. And that is what is currently happening with the supply and demand issue in accounting. So if you want someone very good and you want someone with that skill, expect to pay more for it. And that's what it comes down to. This isn't going to get much better. The last thing that comes into play with pricing is someone's literal circumstances. This is why a post of people discussing what they pay for their CPA or their EA or their tax professional isn't really of much value. Because while there may be some similarities between people's tax circumstances, without knowing an infinite number of additional facts, we have no idea if what they're paying is a good deal or not. Every now and then I come across a post where people are talking about what they pay for their taxes, what they have included, etc. There's always someone who's so cocky to say, I only pay my accountant $1.50 to do my taxes, and I have 46 rental properties. And the only thing I can think is, oh God, what I wouldn't pay to see that tax return. Because there's no way in hell that if you are going to someone who is charging a fraction of what the majority of other people are charging, that they are also miraculously better than all of those other people. Maybe it exists, but most of the time you are getting what you pay for. When it comes to certain explanations related to tax returns, what the taxpayer hears and what the accountant hears are completely different things. So I'm going to provide you guys with some translations. First up is, my business isn't very big. It shouldn't be too complicated. The taxpayer is under the assumption that because this isn't a high revenue business and they don't have a bunch of complexity around having multiple locations and employees and millions of dollars of revenue, etc., that this should make for an easy, quick, and cheap tax return filing. The tax professional hears, I'm going to hand you a pile of disorganized numbers, and half of them I will not have receipts for. Because a business is small or, quote, not complicated, doesn't mean it is going to be any easier to prepare. And oftentimes, it's actually worse to prepare because it's not yet being treated like a business, and there aren't reliable reports. There isn't money being put into maintaining the information needed to complete an accurate, let alone strategic, tax return. Whether you are running a business that does $10,000 a year or $10 million a year, the amount of work is the same. Having there be more or less zeros attached to each number that goes each place on the form does not change the amount of work that goes into doing the tax return. That was an extreme. But at the end of the day, just because your business only made a couple $1,000s instead of a couple $100,000, it doesn't mean it should necessarily cost less to do the taxes for. It's likely going to be more work than a well-organized, structured business. The next phrase that requires translation is going to be, my wife and I just have some LLCs for our rental properties. To the taxpayer, this says we're married, we set up some LLCs together, shouldn't be anything special, it's just us, and all it has is a rental property in each one. This shouldn't be complicated, this shouldn't cost much to do. What a tax professional hears is that there is a good chance both spouse and taxpayer are the owners of that LLC, and in the majority of situations, that creates a partnership tax return with an entirely separate 1065 tax filing. In addition to that, since the taxpayer likely didn't know that was the case, there was not books and records maintained appropriately for a partnership. And in addition to that, partnerships have much more information that go into the reporting. So while the taxpayer says, everyone says to set up LLCs, this shouldn't have been a big deal. We didn't move any money around. Nothing crazy happened. We just structured things for legal protection. The tax professional looks at this, and their first concern is that these are multi-member LLCs creating partnerships, and often at the advice of the general internet, people feel that every single rental should be in its own LLC, and now what we have is 10 different partnership tax return filings. Do you think that taxpayer was expecting to pay to have 11 tax returns filed that year, 10 of which need to have essentially books created for them as part of the process? Absolutely not. But that is the situation that was created. So the phrasing of just have some LLCs or only set up a couple LLCs or any variation thereof can have a dramatic impact on the cost of your tax services for the year. Another phrase that requires translation between the general populace and those of us who are on the dark side of things. My taxes are pretty much the same as last year. I just invested in a few syndications and REITs so that I could help diversify my investments a little bit. What the tax professional hears is, I now have 30 new state tax filings that I was not expecting to have and am not expecting to pay for. What many people do not consider when investing in a syndication, especially a well-diversified one across multiple states, is that if you happen to earn above the minimum filing requirement for a state in which this partnership holds real estate, now you have to file a state tax return for that state as well. I have seen a K-1 where the taxpayer earned maybe a few $100s from that investment for the year, and it resulted in 9 different state tax returns being filed. Most firms charge a few $100s per additional state. So be mindful that what you might consider a simple investment could result in multiple additional filing requirements. So all of this information just to say that what you should pay to have your taxes done can be literally any amount. If you are paying substantially less than the average, I would consider that a red flag. If you are paying substantially more than the average, but it is working with someone who has the knowledge and credentials to give you a level of expertise and quality and planning that you feel comfortable with, then I would consider that a green flag, even if it's much more than your friends pay. There are national surveys that you can look at for this. Right in front of me is the NATP 2023 Average Tax Fee Survey, and you can look at this online. For 2023, the average base price for a 1040 tax return was $250, $248. That didn't include if it had extra schedules on it. So if we had a Schedule A and someone itemized, or Schedule C for a business, etc. This study also shows a breakdown of what type of designation people held who were surveyed, and also the years in the business. And this is interesting. So 32% of those who were surveyed were AFSP, which is Annual Filing Season Program. It's a voluntary program for those who are non-licensed to take continuing education year to year to meet a requirement. Of the remaining categories of everyone else here, we had 9% of other. 10% of people had no designation at all, meaning these are people who have no type of credential, have taken no classes, maybe not. So keep in mind that these people who are not licensed are included in that average fee of that $248. The survey had 17% of participants who were CPAs, 43% who were EAs. So even in a survey combined with those who have federal licenses or CPA licenses and those who have no designation at all, 248 was the average across all of them combined. Looking at the years in business, this is interesting because it holds true to everything else that was being said earlier about those leaving the industry versus coming in. Those who were surveyed who have been doing this for less than 1 year, 0%. People who have been in the tax business for 1 to 5 years, 5%. 6 to 10 years, 6%. At the other end of the scale, of those who have done this 16 to 20 years, that is 12%. So that one category is as much as the people who have been doing this in 1 to 5 years and 6 to 10 years combined. The highest category by far, 21 plus years in the tax business, 67% of people surveyed. Again, 67% have been doing this over 20 years. They've worked a full career already. They're at retirement age. 5% have only been in this industry for under 5 years. The scales are going to keep shifting to a smaller and smaller availability of skilled tax professionals. A closing thought that ties everything we've talked about together: not all but many of those professionals who have been in this industry for 20 plus years have pricing models that are going to be a little bit on the lower end because they've worked with a lot of these clients for 20 years. So if they started off charging someone $30 to do a tax return 20 years ago, they're not going to jump that fee up to $30,000 now. So many people who are leaving the industry had a lower pricing model than those who are coming into the industry. Inflation. Everything costs more. In addition to that, what we are also seeing is that every firm I know right now is having a hard time keeping up with demand. That's because as these older preparers retire, and as they have these large client bases, which normally you would sell your firm, you would transition someone who you trained up to be partner, etc., the difference between a firm that is still operating in a manner to which they had been operating 30 years ago versus a new firm today can be very different. So it's not as desirable for someone who is 5 to 10 years into the industry to buy a firm where the clients are used to working on paper, they are used to coming in and working in person with someone, and they are used to paying a minimal fee because they've been with this person for decades. For someone who is new in the industry, where a lot of things are paperless now, there's a lot more technology, there's a lot more automation, it's a fully different dynamic. So the transition of those people retiring out of the industry also means that in addition to those of you who are currently just looking for a tax professional, there are thousands of people every year where their professional they've had for decades is retired, and now they are also looking for someone new. So I hope this episode helped you come to the realization that what you should pay for your taxes is a completely arbitrary question and doesn't directly relate to any amount. There is no correct amount to be paying for your taxes. There is a concerningly low amount, and there's a ridiculously high amount if it's really not something you need. But keep in mind, you are paying someone for their experience, not for the service you specifically need. So, as always, I hope that you took away some value from this episode. If you have any thoughts on this, any comments, feel free to find me on social media and share those thoughts. Come find me on Facebook, join the Facebook groups linked below, or find me on Instagram. I'm RE Tax Strategist on most platforms. And as always, I will talk to you guys next week.